Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Crypto investors are having a better time of it right now, with Bitcoin rebounding to levels not seen for 18 months or so. Expectations of interest rate reductions and spot Bitcoin exchange-traded funds have seen the digital asset climb in recent weeks. But where's the market heading? And what will greater regulation or the potential for greater regulation do to cryptos? Remember, this is general information only, and you should seek professional advice before making investment decisions. John O'Loughlin is the Managing Director, APAC, at Coinbase, the largest cryptocurrency exchange in the US. And John, you're the only listed exchange in the US. That's right, isn't it?
That is right, Sean. And with your safe harbour comments that we've just listened to, I'm also under the microscope in terms of being a fully audited and compliant exchange. It's something we take a lot of pride in.
Yeah.
It's quite public that we're in a number of actions with the SEC right now, but we believe that the regulation is going in the right direction. And I think that narrative is really headed in a positive kind of direction. Also, locally in Australia, recent guidance from Treasury here has provided clarity to the market that digital assets will come under the purview of ASIC and an AFSL regime. And I think this is a welcome decision. It's something we've spent a lot of time leaning in on. And I think investors here, kind of look at these big Western markets where, they kind of respect the decision of the regulators. And we're excited to see where this is going in Australia.
Okay, let's take a step back. For those who don't know a lot about crypto exchanges and cryptocurrencies, we talk about interest rates and ETFs helping Bitcoin particularly. It's the largest of the cryptocurrencies. Let's go through interest rates first. Why do interest rates / inflation matter for cryptocurrencies like Bitcoin?
Yeah, I think historically Bitcoin has been the kind of blue chip token. And so if you look at the assets that we host on Coinbase, there's over 300 assets, and we take a very kind of careful due diligence approach to those. And so Bitcoin's been the one that's, been around the longest, and it's the most well kind of understood token or digital asset. And in that regard, I think there's a kind of a degree of transparency, a history of market performance. People can correlate it with the ebbs and flows of interest rate. And I think increasingly there's a demand from a new, I would say, demographic, probably a younger demographic, a little bit more of an open-minded demographic, into an alternative asset class, kind of akin to what gold was in a former life for lots of people, as a hedge to the US dollar. And so we see these correlations in time when there are spikes and rises in interest rates. We see a correlation with what happens in Bitcoin. We can't predict what's going to happen with Bitcoin, and we're not really looking at future trends of Bitcoin. We're an exchange, and so we want to be independent and host assets that we believe pass very kind of clear due diligence tests. It should be noted that there are, over kind of 5,000 tokens out there in the market, and we only host a fraction of those. But the bulk of day-to-day traders and mum and pop traders, people who are entering the market, are really, looking at Bitcoin or Ethereum. So a number of the trends that you highlighted earlier, Sean, for example, the launch of the ETF market, it's probably not just the launch of the ETF market, but the names behind those filings. So the BlackRocks, the Fidelities of the world, clearly they've got very big user bases, and there's going to be some momentum, coming into those markets when those ETFs are approved.
Stay with me, John. We'll be back in a minute. I'm speaking to John O'Loughlin, Managing Director, APAC at Coinbase. So why is a spot Bitcoin ETF so important? I get that it gives a lot of credibility when BlackRock is chasing the SEC to try and get an ETF up on it. Does it also make it easier, though, for investors to access cryptocurrencies?
100%. Yeah, I mean, I think it's still not the most straightforward asset class to engage with. A lot of people, particularly if we look at, self-managed super funds, right? So this is a, $890 billion market in Australia. It's about a third of the overall supermarket, or maybe 25 to 30% of the overall Australian supermarket. And, why it's important to Coinbase is because that Australian pool of savings is the fifth biggest in the world. And clearly there's an opportunity there. Lots of those investors have series of advisors or kind of default ways that gives them access to investments. And ETFs are clearly well understood and have had a very good run in terms of pricing and access. There's all sorts of advantages to why people like that space. And so for, I would say more traditional investors, they can just kind of add an ETF to their portfolio without having to necessarily sign up to a crypto exchange. And then I think also their tax obligations and other kind of governance concerns they have to be aware of are all kind of taken care of. You can do that with Coinbase Retail Exchange. We link to all sorts of partners like Coinly, Crypto Tax Calculator, all sorts of technologies that allow you to have a very seamless interaction with the ATO and be completely compliant in terms of managing any appreciation or losses you have in your crypto portfolio. But I think there is a big part of this market that has, a familiarity to ETFs. I would also say that older demographic, in terms of, let's say, a kind of more senior age group in that self-managed super fund, their ARPU, or let's say the amount of money they're going to put into this asset class, even if it is half a percentage or a percentage point of their overall asset allocation in terms of diversifying risk and following a classic kind of, diversification strategy in your portfolio management, even that 0.5 or 1% allocation of their total net worth is going to be a multiple of what, let's say, what's historically been referred to as kind of, Bitcoin bros, or, the initial kind of young male demographic that has been, very interested in this kind of speculative market. Yep. We have never kind of played to that audience. I think our user base is a little bit more wary of our brand and the attributes of the brand and the protections that come with the Coinbase brand. And so that's why I think this ETF market has quite an interesting potential, and then also a local overlay of why I think there's going to be demand for it in Australia.
Okay, so on that whole reputation issue, I was reading something, was it Kathy Wood from ARK Investments was quoted in the paper the other day saying you should have 2 to 6% of your assets in cryptos. Now, we're not an investing podcast. Go and see your financial advisor. We're certainly not recommending that, but it's just interesting someone like that focuses that much on cryptocurrencies. The flip side to that is we've seen the collapse of Terra USD stablecoin. We have seen some exchanges collapse big time and some high-profile people get charged over that. Is that kind of a shakeout that was needed? Has it done too much damage to the industry? How do you put those things into perspective?
Yeah, I mean, I personally put them into perspective, having worked at Goldman Sachs in 1999 and been an advisor to companies like WorldCom and worked on big clients like Enron. And at the time, advisors who were mentors to me were moving around the market and talking incredibly positively about these big conglomerates. And they worked out to be, major fraud cases. And so, I think when you have the growth of an industry, you're going to have these bad actors. In those cases, I think the positive news is that, some of the bankruptcy outcomes for that major American exchange or US or global exchange based out of the Bahamas have been quite kind of positive. And so I think there's a little bit of recovery in terms of the reputation for the industry around the FTX windup. But yeah, certainly it wasn't a great day for the industry. And then the recent charges against Binance are very serious. And, it's not really our position to comment on competitors in the market. But I will say that, we've spent an inordinate amount of time and resources on governance ever since the inception of the business. I was working previously in the e-commerce and payment space and the remittances space, and have always personally been very concerned about my own kind of professional reputation as an AFSL listed director and the link to the brand that you're kind of working with. So I did, pretty deep due diligence on Coinbase and looked at, fellow colleagues or former colleagues from other firms who had worked there and knew people there. And being a director of a number of Coinbase entities in multiple geographies in APAC, I can tell you we've got 2 approaches to the market globally. One is what we call a go deep strategy, and that's in about 10 markets globally where we're fully regulated, boots on the ground, leaning into the regulators very hard, and have directors and audits and everything else you can imagine. And that's basically the EU and the UK. In APAC, it's Singapore and Australia. We're looking to hopefully launch in a couple of more markets. And in the Americas, it's the US and buttressed on either side by kind of Brazil and Canada. The rest of the world, we want to approach, because we want to bring 1 billion people on chain with what we call a go broad strategy. And that's using, more innovative and dynamic technology, not dissimilar to how the kind of fintech world has tackled all sorts of geographies where traditional banking is challenging, with things like Coinbase Wallet and our layer 2 Ethereum platform Base and peer-to-peer products and wallet as a service, which brands can build and build out their own digital crypto wallets. So lots of innovation in the kind of Web3 ecosystem space to get into other markets where maybe the regulatory guidance is not so clear, but there are very big populations of people. And in those more kind of traditional Western markets, we're very much, we've kind of landed the boat, we've kind of burnt the boat, so to say, and we're boots on the ground and very much engaged. And that's, certainly the case in Australia as we look into this new regime that is going to be under an AFSL.
John, thank you for talking to Fear and Greed.
Thanks, Sean. Pleasure to be back.
That was John O'Loughlin, Managing Director, APAC at Coinbase. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.